What is up, everybody? Welcome to the Monday Market Mortgage Update with myself, Sean Grapevine, your host from Atlanta, Georgia. I am the Director of Agent Direct here at UMortgage, and I am joined today, as with most Mondays, by the Mac of the Rate Stack. He has bips for breakfast. He does best efforts with no effort. His GPA at the University of Texas was higher than today's 10-year T-note. He's the Baron of Bips, the Lord of the Locks. He's the Sultan of SLAs, the King of collateralized debt. He's the Colossus of credit. Is that a hawk or is it a dove? Only the ornithologist of this jungle of a market can identify them for us. It's the one, the only, the awesome Austin Koenig. Welcome, Austin.
Thanks, Sean. Great intro as always. A week off, I think you got even better at it. So
I think it's been like 2 or 3 weeks. It's been too long since you and I have done this. So I just decided to use all of the ones on the list instead of picking and choosing.
Yeah, no question. Well, it was great, and great to have you back on and getting back to the old way of doing the Monday market updates. So we got a lot to talk about this week. Last week was a slow week. I think we had a good couple market minutes though. We had Reese actually as one of the guest stars of doing that last week. Definitely go give that a watch. He does a great job breaking down how cheap longer term locks are right now. I'm thinking like 15 to 30, 30 to 45, and how expensive extensions are with, looking with our investors doing extensions there, how expensive they are compared to just locking a little bit longer up front. So definitely go give those a watch. Have some great market minutes coming up this week. But with that being said, we have a lot of data and really things that can move the market that's coming up this week. I don't know where you want to start, but I think Tuesday and Wednesday are the big ones.
Yeah. Well, we definitely it's Fed week. Well, let's leave that out there as a teaser and loop back around to that one. Before we move on to this week, like you said, last week was a little bit slow. Market was probably digesting some jobs numbers from the previous week, though, most of last week. Any numbers at all that we missed last week, or was it just a dud?
I will say one thing that was kind of I think something the market can get a little bit of solace from in terms of where the Fed's going. Initial jobless claims came out higher than expected. Something that we get every week, right? But if we're seeing initial jobless claims kind of beat expectations or kind of continue to inch up higher, those are some things that I think the Fed needs to pay attention to. At the end of the day, the market data this week overshadows that kind of data point for this week, I guess you could say, because while it was a very slow data week last week, we had some issuance and stuff with Canada. They're hiking a little bit of a surprise hike on their end. They moved markets, but it was kind of reaching at straws and just little activity in the markets. Volume was light on the trading side, so just one move one way could kind of propel the market a direction for the day, it seemed like. So this week we have kind of a choppy day to start here. Early morning, the way the market opened, we saw kind of a little bit of a rally. It's muted at first, and then now we're seeing kind of a sell-off. Who knows? Since we started this, session, who knows what the market's at right now? It's been kind of one of those mornings. But with that being said, Tuesday we have CPI coming out in the morning, so that's going to be a big number. It's really the last big data point the market gets to hold on to outside of PPI, which is kind of like a secondary inflation measure, from the producer side of things, that comes out right before the Fed, announces if they're hiking or not on Wednesday afternoon. So a lot of things to consider there.
Does CPI come out with enough time for the Fed to digest it? I mean, will they have already made their decision? I know we hear about it, Wednesday at 2 p.m. When do we think that the Fed is actually letting the ink dry on the paper for what their decision is?
Yeah, so they kind of meet over 2 days. Is really how it goes. Is they start really meeting tomorrow, and they conclude their meetings on Wednesday with the final thing. Essentially, is them announcing at 2, and then there's really a press conference about 30 minutes after that announcement with Jerome Powell. We know how much drama can be in there just with the way he says things, the market is, everyone on the street has, that playing and kind of hanging on every single word, right? So it's one of those things that is also very important is, how he says things. So obviously he's going to be able to comment on that. In terms of how it affects the decision of what they do, I would say if CPI was really, I would say really, not the way we want to see it, right? Like it's going to be higher, or like it moved up from, the year-over-year measure last month, or it really beat expectations in terms of where inflation is looking at. I think that's where something we could see move the market quite a bit, and the Fed actually, pay attention to that pretty closely. But at the same time, I think what we have to kind of acknowledge is the Fed has hinted at possibly doing a pause this month. At the same time, what is going to be their way of thinking? How much do we need to drive the rate up more to kind of combat sticky inflation? How much do we need to be paying attention to the job market continually? Is it all about wages? Is it about jobs numbers, about unemployment? Those are the sort of things we'd like to get a little bit more clarity on, and seeing how they're, seeing if they want to do a wait and see, because they've already gotten pretty tight on their quantitative. Well, their quantitative easing is no longer there. It's about now, and they've already done a pretty pretty extensive effort recently. It's just a matter of do they want to wait, see how things play out for another month before they decide to hike again or continue to pause? Those are all things the market needs clarity on, and that's what we're going to find out this week. So just I know there's a lot, but that's really what
what
comes down.
What's the what do people think CPI is going to come out at? What's the investor consensus?
I'd say the consensus is low 4. So like
low
right
fours?
Now we came out with
That'd be great.
It would be great. And last month CPI a nominal level measured at 4.9. With kind of thinking about how it's measured too, as we're looking year over year, looking backwards a year, right? So for us to get like a month over month growth of like 0.2 or 0.1%, we can really kind of get to that low 4.1 between 4.3% is kind of what I would say the market consensus is. So it's definitely a if you look on just a piece of paper, it looks like a big drop, but that's what the market is looking for. If we come out with like a 4.8, like I think that's a disappointing number, and who knows what the reaction is from the Fed.
Yeah, I hate it. I hate it when the market's optimistic about inflation. I mean, it means that the best possible scenario is status quo. There's no chance for good news, right? Like it's not going to come out at 3.9, and really blow us away. Suppose it could. It doesn't seem likely. But 4.2, like let's talk about that in the long term. I mean, 4.2, 4.3, even 4.4. I mean, that is getting dangerously close to running out of room to be concerned, right? Like there's not, as I'm always saying, there's not that many numbers between 2 and 4, and that's got to be maybe not like put a feather in your cap and call it a day for the Fed, but it's got to be start to feel like we've sort of broken the back of inflation, or at least beginning to see the light at the end of the tunnel. Is that right, or am I just too optimistic? Is 4.2 still a disaster for our economy?
I think it's optimistic, but at the end of the day, like it is showing the progress is moving in the right direction. Here's what I'll say too, though, is core inflation is what we have to also pay attention to, and core actually is actually at a higher level than nominal headline inflation, right? So we had 5.5% was our measure last month. I mean, the consensus is like 5.3 for this month. So there's a disconnect, and that sticky core inflation is what there is some lagging aspects to it. So I wouldn't say it's perfectly great measure of exactly what's happening to the consumer today. But at the end of the day, these are the kind of stickier parts that maybe are, the Fed's continually trying to chip away at. I think it's going to be important to kind of dig into the buckets of what's actually, keeping inflation higher, or, what parts of that bucket necessarily are, driving the inflation number up or down. Like, I think that's an important part to consider, and, seeing what monetary policy weapons do they have to tackle things that are still red hot, if there are those. So
Right,
that's
right.
kind
I
of
mean,
the way I
they're going to have to
think.
if they're so obsessed with like increasing the unemployment rate, they're just going to have to start going into people's jobs and firing them themselves. It's like at some point, they're going to have to own up to the fact that like we're dangerously close to a soft landing that nobody believed was possible. And I know there's 2 or 3% to go in inflation, but it looks like it's headed the right direction. So all right, we've got so we've got a potential pause, or a potential hike. We haven't seen the Fed actually do anything other than what they've telegraphed in months, if not years. Right? They've learned their lesson that they can basically break the market if they do anything that varies from like what they telegraphed in the weeks and months prior to a meeting. But this one really has the biggest chance to have like an explosive effect, right? Like if they decide to hike on Wednesday, the market's gonna scare the market. I take it, right?
I would agree that would be a surprise. Now here's the thing too is I think the market is ready to stomach a hike, but this meeting or next, like like a net 25 bip hike. However, I think at the end of the day, it's going to be the clarity. I think pausing this month will be, I think, helpful for market reaction, but it'll be clarity too about what needs to happen to warrant the hike next meeting in
Sure,
July.
sure.
So I think
What
that's kind of the clarity the market's looking for.
do you know what the swaps are pointing to for chances of hike versus chances of pause for this meeting?
I didn't pull it up this morning, but it's varied a lot recently. I would say at the end of the day, I think it's trended to majority think a pause is going to happen this hike or this meeting. Sorry, but in the next meeting, there's still kind of like a favor to probably hike 25 bips. So I think at the end of the day, this can fluctuate quite a bit. And there's no Fed speakers like over the past couple of days and today,
Mm-hmm.
up until the hike. So what's going to drive the market is really tomorrow. So I can tell you one thing today, and if the way CPI comes out tomorrow, can completely flip that on its nose. So at the end of the day, I think we can talk all we want about what it's showing right now. Tomorrow's going to be pretty big.
It's a different story. Yeah. All right.
Yeah.
Interesting. All right. So man, year and a half later, and we're still just like, man, just right in the thick of all this volatility.
Oh, yeah.
So with all this volatility, I mean, what's your recommendation? As Lord of the Locks, the Sultan of SLAs, etc. What is your advice to you mortgage loan officers and all the people that are now that we're streaming this live on multiple platforms? Like, is this a lock or float situation? I think I know the answer, but this week, lock or float?
At the end of the day, we have to, if everyone likes what they're seeing, the borrower's comfortable with the payment, the borrower's comfortable with the rate, let's lock it in. It's very much a gambling. You're gonna have to gamble if you're gonna say, I know what the market's gonna do.
Yeah.
I know what Jerome Powell's gonna do. I know how the fixed income market's gonna react. I know how these treasury auctions this afternoon are gonna go. I would say generally it's going to be one of those like it, lock it terms for a while here, and I don't see where that ends. Sure, things can always change, but at the end of the day, there's a lot of stuff that can happen this week, and if everyone's comfortable with that, that quote, I don't see any reason not to lock it in.
Yeah, 100%. I think you just have to. I'm past. If you like it, lock it. If you don't like it, lock it, because you got a real opportunity to not like it a whole lot more. And you mortgage, right? Like we have lender optionality. We've got the best float down policy in the world, which is just called other lenders. And if things improve, then hopefully we can use the float down policy at our investors. But if not, like we have 25 more where they'll be improving pricing as well. So on at Agent Direct, it's we don't do floats. We just don't do it. There's no reason to. If I knew what direction the bond market was going to go, I would be trading from my yacht right now. So I'm excited for this week. Should be good. CPI and Fed meeting back to back. I mean, it's a blockbuster week. They should sell tickets. Honestly, it's gonna be a good week for those who like drama, volatility, and angst. So keep an eye out for CPI tomorrow and the Fed move on Wednesday. Also, do we have anything from secondary markets? Any new loans? Any new lenders coming out or that have come out recently that you're excited about? Anybody new we're partnering with?
I would just say, we're continually making some improvements to our SharePoint with, everything that's going on with like our lenders and all of the products that they're offering. Some of these changes will be rolling out here shortly. I will say a couple of people have been using the lender and DPA request tool. That's actually gone really well. So, feel free to use that whenever you have these DPA programs or different lenders you see a program with that's particularly unique that you want to work with, or try to find a way that we can implement it into our product set. Utilize that. Rob and I are on top of that stuff and, looking into each thing that you guys are requesting. So continue submitting those requests there, and the SharePoint improvements will be coming out in the next couple of weeks. Just to kind of make it easier for you guys to, say, hey, I'm looking at a, bank statement loan. Who's the best, bank statement lender we have, or option for us? You have that kind of subsetted into a easier to use, more consumer friendly from like a loan officer's perspective, in the SharePoint. So those are some improvements that you guys will be able to see and benefit from here in the near future. But continue submitting those requests as you see fit. We'll obviously come out with announcements as we have some other ones coming on. We have one non-QM lender that we're looking to add on. I'm not going to say the name quite yet, but it's just one of those things that we're just continually adding on product optionality for you guys. So excited to have that.
What's the new non-QM lenders, like any niche that we should be excited about?
I think at the end of the day, there's just more like it's just another like fix and flip option. Some of the other non-QM like guidelines, a little bit wider here and there. It's just one of those ones where we're just going to have a little bit more of a, hey, we had a lender on, we had some of these other lenders on, just giving you guys another option nonetheless. So
love it.
So it's nothing too crazy, but at the end of the day, it's giving you guys the options and making sure that if one moves out of the market, we have someone else to go to too. So just trying to make sure you guys have all the options at your hands. So that's pretty much it from the secondary side.
All right, perfect. Well, before I steer this Monday market ship back into the harbor so we can all get back to work, one quick thing, you guys probably already know this, but should check out the new income limits in your area for Freddie and Fannie. The new 80% AMI or the new AMI numbers are out, so that helps the 1% down, Home Ready, Home Possible, all of our affordable products, Borrow Smart, stuff like that. I saw in my area it went up by about $7,000 a year to like the mid 80s in Atlanta, which is actually like pretty reasonable finally. So definitely make sure you check out the new AMI numbers on the AMI tools. They're the same between Freddie and Fannie, so use either one of them. And definitely worth checking in with people who didn't qualify for 1% down that may now with the higher AMI limit from UWM, and then now the higher AMI. So that's my little plug for that. We have gone super long. I just got so excited about being back in the hot seat here. So thanks for your time, Austin. Thanks for your time, everybody who's watching. And let's go get some loans. See you guys.
See you guys. Thanks.